Now, everyone, listen to what Treasury Secretary Janet Yellen said about Biden's tax hikes. Roll it.
The president has been very clear that no family earning less than $400,000 will face a tax hike. He's not proposed such a thing since he took office, and he's not proposing to allow that to happen when parts of TCJA expire.
Kevin O'Leary is with me in New York City this morning. What about the middle class? Do they get hit with by Biden's tax changes?
100%. They're getting hit two ways. You know, raising taxes at this point, I mean, obviously, you do this because you're in an election cycle, and taxing the rich is always a good message, always. Somebody's got to tax the rich. They got to pay their fair share. That rhetoric's gone on for decades in political cycles. However, imposing tax hikes right now on the U.S. economy is a mistake because you've got high inflation still, and that's becoming a problem, obviously, because, you know, there was a narrative only 3 months ago that we're going to get 6 rate cuts. That's not going to happen. I predict no rate cuts. And then, so you're taxing from when you have inflation, that is a hidden tax on the middle class, obviously. And then if you tax again on top of that, you're squeezing growth out of the economy. It's a very simple equation. When the government takes money from the individual, they can no longer invest that in a business or in their own retirement or anywhere else. It goes into the meat grinder of government, which is, as we all know,
it's a meat grinder.
Well, meat grinder and wasteful in some ways, and inflationary of late, because we've had all these bills that have been put through the CHIPS Act, the Inflation Reduction Act. This is a bad idea, and I don't want to make it on a partisan argument. It's just a bad idea. Sometimes ideas are just bad, the old-fashioned way. This is a bad one.
Got it. I want to turn to the markets for a second. We've got interest rates elevated, shall we put it like that. The economy is clearly slowing down. Inflation is picking up a little bit. Why not sell stock?
What's the alternative is the question. You know, you're making a good point. However, when you look at growth, the underlying growth in S&P 500 and Russell 2000, I actually like what I see. The consumer's slowing, I get that. Real estate is an issue in these rolling blackouts in these regional banks, I get it. But right now, equities are maintaining the fascination of investors to the potential of policy change. You got a 50-50 chance in this election that you're going to get more pro-business if Trump gets elected. And so if you're a money manager and a fiduciary like I am, I'm saying to myself, do I really want to sell right now? Or do I want to wait 9 months and see what happens on all of the policy around taxation, all the policy around regulation, pro-energy? And I'm kind of, again, saying it on a bipartisan basis. That's a good outcome for me if I'm equity. So I've got a 50-50 chance. Right now, you could throw a ball in the air and say, I don't know who's going to be president.
Yeah, you certainly do that. Right, Kevin. Stay there with me for the hour, I do believe.